Hey guys, Matt here. On this channel, we talk about stocks, investing, and personal finance, fun perspective on my own financial journey. And in this week's portfolio update, I'm going to show you guys how I pick stocks. In my normal videos, my normal updates, I do my portfolio update at the end. Well, in this video, I felt it would make sense to show you my portfolio at the beginning, just to show you guys that the method I use to pick stocks, it is working for me so far. I just passed 40K as far as my portfolio equity, and I am up 38.03%, and we are well into 5-figure gains. Now, as far as what kind of stocks I pick, you will notice that I don't really stick to just dividend investing. I don't just stick to growth investing. I don't just stick to value investing. My personal philosophy is just to support companies that I like. Now, a few disclaimers before we begin. And I'm going to keep looking at my notes just to make sure I miss nothing out of this. First of all, this strategy is geared towards buy and hold investment because that's what I do. This is not for day trading. This is not for short-term investing. This is not for swing trading. This strategy is geared towards boring ass buying and holding. I have to stress that these methods are methods that work for me. These methods may not work for you, your financial needs, your risk tolerance, or anything like that. So basically, when researching companies, I need to find out everything I need to know about the company. I need to find out their business model, their products, who they sell to, and then I need to check out their financial information and their statistics, their valuation statistics. And the goal through all this is to answer 4 questions. Do I understand this company? Do I like this company? Do I think this company is going to do well over the next 3 to 5 years? Do I think this company is trading at a good price? So for the business model, I like to start by going to the company's webpage and just start clicking through it and getting a feel for what the company is all about. Now, there is one resource that you need to find on the company's website, and you can either look through it on the website, or you can just type the name of the company into Google, Cisco Investor Relations. Now, this right here is catered towards people that want to invest in a company. From here, you can find out different things depending on what the site shows you, such as an overview, news, any recent events that talk about the company, financial information, stock information, and so on. So from this investor relations page, we need to navigate it, and we need to find 2 documents. We need to find a 10K, which is the company's SEC filed annual report. And then we need to find the company's latest 10Q, which is the company's latest filed quarterly report. Now, for most sites, it will probably be under SEC filings. So we can go here. Typically, you can go to, let's say, 2020. That was the last fiscal year. Annual filings. And this is it, the 10K right here. And you would basically download this into the form of your choosing and then read it. So this is a company's 10K. There are many pages, and it would take me a few hours to get to read through everything. Now, let me try to make this a little bigger, ladies. So I'm not going to go through all of this on this video because, again, hours on end. But basically, you need to read through this entire thing. Now, one of the good things about this is the business thing, which is usually the first part of a 10K. Now, this business section will tell you everything you need to know about the company's business model. Everything. So basically, you need to read through all this. Well, you need to read through the entire 10K, but while reading all this, you should start to form an opinion on some of those questions. Do you understand what the company does? Do you like the company? If you don't like the company, well, stop right there, move on to the next company. If you do like the company, well, continue on. Now, also in this 10K, you'll find other very important sections such as risk factors, legal proceeding, financial data, what the company plans on doing for the year, if they choose to include that, and other various information. Anyways, read the whole thing. The 10Q is much smaller. Well, not here. It's actually a lot of pages, but basically it focuses strictly on the activities going on in that particular quarter. And as I read through both documents, I mean, do I like the company? And based on what I'm reading, do I think the company is going to do well over the next 3 to 5 years? Now, once you're satisfied with that, let's start taking a look at some financials and some other numbers. Now, normally when I go through the financials, I would read them in the 10K, and so will you. However, for the purposes of this video, just to make all the information very clear to people watching, because I mean, this is a lot of information because it tells the numbers and then the story behind the numbers. But to make it clearer, I'm going to use Yahoo Finance. So from Yahoo Finance, you will get a lot of information about this stock. We'll find the price it's trading at right now, and we'll get back to that later. It will show you the PE ratio, the price to earnings. We'll get back to that later. It will tell you if it pays a dividend. So if you are trying to look at a stock for dividends, this will show you if it's paying one or not. But what we're looking for to start out with is the financials. So if you go click on financials, go to income statement and biannual. So this is not a video on how to read a financial statement. So I'm not going to touch over what a lot of these are, but I'm just going to show you what I look for. So on the annual statement, I'll look at the revenue. I want to make sure the numbers are going up. And if it's a growth stock, a stock I'm looking at for growth potential, I want to make sure that these numbers are growing by like 15% or more. If it's more of a value stock, I just want to make sure that some growth is happening in the first place. I want to make sure the gross profit is going up or holding steady. And if not, I want to read the story behind why it's not. Like, for example, 2020 was a bad year for everyone, especially for Cisco, I know. Operating income, I want to make sure that number is going up. And then their net income, obviously, I want to make sure that number is going up, or I need a good story as to why that's not. Now, it is not imperative that these numbers go up every year, but I do want to see, growth down the line. And I do want to see, and as I read the company, the news and all that, I do want to see in my head, have an opinion as to whether this company is going to grow in the future. EPS, I'd like to see it go up year over year, but that's not the most important thing in the world to me. Now, going to quarterly, I know a lot of companies tend to earn more in specific quarters than they do in other quarters, but basically, I just want to see the revenue holding steady or going up. Now, if you look at their 10Q, oftentimes you can get a comparison, side-by-side comparison of this quarter versus this quarter last year. Basically, but we're pretty much looking at this at the same thing. Revenue, profit, operating income, and then their net income. Looking at their balance sheet, I want to know, do they have more assets than liabilities? And that's true whether they're a growth company or a value company. Do they have more assets than liabilities? I need that to be true. The next thing I look for is total debt. I want to see the debt going down, or preferably not at all, but I want to see the debt going down. Even better is I want to see a company that has more cash and cash equivalents than total debt, because that means if a company wanted to, they could use their cash to pay off all their debt in full. From a cash flow sheet, I want to see the operating cash flow. I would like to see that going up or remaining steady. And then the other thing I like to look at is their free cash flow, which is this minus capex. I want to see these numbers go up or hold steady on an annual or a quarterly basis. Now, through these steps, your opinion should start to solidify some more. Do you understand the company? Do you like the company? Do you think the company is going to do well? If your opinion through all this is yes, then let's move on. Now, if this is a stock that you are looking into for dividends, another place you're going to want to look up is historical data. So you click on that, click on 5 years, click on dividends, and apply. This will give you a history of its dividends. Now, what you want to see is it constantly raising its dividends every year, which it is doing. So if you're interested in a company for dividends and you see stuff like this, that's pretty good. Now, as far as dividend rate, dividend yield, this is the percentage of the stock price that will be paid out in dividends. I like to see this between 3 or 4. And depending on the strength of the company, I can go higher. But typically anything below, like above 6 or 7 is something that you should probably look into the company a little more. Like, for example, AT&T has nearly a 7% dividend. Now, on the statistics tab, there are a few things we need to look at. We'll go back up here in a second for the last little bit. But down here, you will see a payout ratio. This is the percentage of a company's bottom line, either in net income or free cash flow, whichever is better for the company, that they pay out in dividends. And generally, if you're looking into a company for dividends, I try to look for under 75%. Anything above that gets a little risky. So assuming I go through all those steps and still like the company, now I need to figure out whether the company is trading at a good price. So in order for me to figure out whether this is a trading at a good stock or not, I go to the statistics page. Now, if this is a growth stock, these things matter a little less. I still look at them, but what's more important is my opinion on whether this stock is going to explode over the long term or not. But since this is not a growth stock, we can look at this. The 4 PE and the most ideal scenario, I would like to be, well, 1 less than the trailing PE and 2 under 15. That would be perfect in my eye. Anything below that is beautiful. Now, in this stock market, that is a little difficult to come by. So if it's not, I don't worry about it. There are other things I look at. For example, I can compare it with the current S&P 500 PE ratio, which is a lot. Or if I use Fidelity's stock analysis tool, I can compare the 4 PE of Cisco with the industry average. So I got different numbers to choose from, but from everything I'm comparing, the PE ratio looks pretty good. Another number I look at is the PEG ratio. This is with companies I expect more for growth. Now lower is better. Perfect will be below 1, but this is fine. So if I determine that this is good and this is good, then in my opinion, the stock is probably trading at a good price. And if I wanted to, I can compare it against other companies. Now, I don't think Amazon was really a competitor, but whatever. Another thing I do if I'm really stuck as to what price, I think is a fair value for this is I can go to the analysis page. I can take the average analyst estimate of this year for EPS, 3.38. So, for example, let's take 3.38 and we'll multiply it by the industry average, 32.14. That gives me $108.63. Now, that would be the price at the end of 2022. Now, if I wanted to work backwards, and let's assume I wanted a 10% return. So, I can divide it by 1.10 and get $98.75. That would be the price at the end of 2021. And then I will sort of eyeball it from there. Now that amount is sort of a lot for Cisco, but that gives me an eyeball as to a place to start as far as a go-in price. Hey, this is Editing Matt. One thing I want to add is that depending on how sure I am of that final number, even after eyeballing it, sometimes or a lot of times I will take that number and take 90% of that 90% of that number or even 80% of that number and then use that as a better number. Now, once I'm happy with that, there are still a few more steps I want to take. For example, I want to check up on the news, go to Google the name of the company, and just read and make sure the news I'm reading is news that I like. Another thing I want to do is I want to find the CEO of the company I'm looking at, and I want to see if I can catch any interviews and make sure I think the CEO is okay. And then the last thing I want to do is I want to listen to our latest earnings call. I want to make sure the company is speaking in a confident tone. They're saying things that I want to hear, and that they are looking forward to a bright future. And through all that, I will have an answer to the 4 questions I talked about towards the beginning of the video. Do I understand the company? Do I like the company? Do I think the company is going to do well over the next 3 to 5 years? Do I think the company is trading at a good price? Well, if the answer to all those 4 questions are yes, well, then it's time for me to buy the stock. Nowadays, I don't want to buy all the shares that I want to buy at one time. Because in the short term, I don't know whether the price is going to go up or down. And because I'm a mind reader and the number I pick was a ballpark number, what I do is, let's say, for example, I want to spend $4,000 on Cisco. So what I might do is I might spend $2,000 on Cisco stock. And then I wait. And then if the price of the stock goes down, like maybe 5%, I spend another $1,000. And if it goes down another 5%, I spend the last $1,000. Now, if the price shoots back up, I don't do anything. I just keep my money exactly where it is. And once I built my position, I do the step that is easiest to explain, but hardest to actually do. I wait. And that, my friends, is how I pick stocks. Hope you enjoyed this video. Take care, have a great day, and eat your vegetables.